Good morning, everyone. This is Doug Campbell with Right Way Options, coming to you with the morning market preparation video for December 11th, 2017. Hey, I hope everyone had an awesome weekend and you're ready to get back into the saddle here and get going. Let's take a look at the market and see what it's telling us here. If we look at the diamonds, we can clearly see an uptrend. An uptrend is in play, and this morning we're getting a gap up open. Futures currently at this moment are suggesting just a slight gap up open, and that's changed here just a little bit, even in just the last few minutes. So we're going to have to watch that closely. Now, one of the things I always am cautious of is gap ups to new market highs. And the reason I am is I've seen, so many times that we gap up to that new market high, and then we sell the rest of the, get a whipsaw or sell into it. Now, whipsaw is nothing more than that price action where we hop up, reverse, and we can come right back up. So it whips. And so you want to be careful. You want to be cautious of that. You want to watch carefully as to what's going on with this price action in the morning. So the last thing I want to do on a gap up open is chase into it. I know we get all whipped up in the morning by the news, CNBC, all the headlines and everything happening out there, and we get this idea that we need to hurry up and rush. And I can tell you that is just absolutely not true. There's never a need to have to rush into the market. The market will always provide us an opportunity if we're just patient and wait for it. So be careful not to chase this morning. Remember, we have quite a little bit of news coming up in the economic calendar. We'll talk about that in just a second. Let's take a quick look at the SPY. SPY had a great morning star pattern here, right off price support, did follow through. Now this morning, we were actually showing, a really nice bullishness earlier on, and now that's showing just a little bit of bullishness here this morning. Nothing major here, so be really careful about rushing in. Taking a look at the Qs, those doggone Qs, they popped above this resistance level, and that was great to see, and they managed to hold on to it. But we didn't exactly leave a confident candle pattern here behind, and the suggestion of a lower high is here. So we'll want to watch that really carefully and closely. If we happen to slip back below that support and below this trend, we may have some trouble ahead of us on the Qs, so watch that closely. Hopefully this will just find support in here, buyers will step in, and we'll be good to go on the Qs. But let's be a little cautious there. And IWM, this doggone thing just can't seem to quite get out of its own way. And IWM rallying up on Friday, but certainly not providing much confidence that it's ready to just participate with the market to the upside. So kind of be watchful of that. Now the old VIX here, here's something I think is quite interesting, is that the VIX, even though we've had just kind of a light volume move up the last few days in the market, the VIX has decidedly went south, and so suggesting that there's no fear here in the market, that gives us some confidence that the bulls could be right. So we'll kind of have to just be measured. Don't predict. If you find a good buy signal, make sure you plan those trades carefully. Know what your risk is in the trade, and that's the best we can do. If we waste our time trying to predict what the market is going to do, we're normally going to lose. There's just too many factors to predict, and that really is ego really just trampling all over common sense, because there's far too many factors for us to predict. Geopolitical concerns, and just all the emotion of the market. We can't predict that, and the truth is we never have been able to. So just utilize your common sense here. We are in a trend. We have to be bullish. We're gapping up to a price high. That's a caution sign. You know, we're not showing great volume here in this rally. That is a little bit of a caution sign. So just make sure you're planning and you're moving forward carefully with the market acting like it is currently. Let's take a quick look at the economic calendar here. Economic calendar today is really light. We only have the job openings report. That's expected to remain very, very strong. No change there, and just a bunch of bond auctions. But here's what I want to point your attention to, and that's the FOMC announcement. That's coming, 2 o'clock Eastern time on Wednesday, and it's fairly common that the market gets it drags, gets choppy and boring as we wait for that number. So don't be surprised if after this market rush that we just kind of die on the vine. Then that's another reason you just don't want to chase this market. So be really, really careful of that. On the earnings calendar, we only had like 18 companies on the list today for earnings. None of those were, quick look, were ones that I would expect could even come close to moving the market. So kind of keep an eye on that with those. Now, of course, they can certainly move your account if you're in those trades and don't have a plan. So always make sure that you're checking ahead. Anything that you hold or anything that you're intending to hold, keep an eye on that for those reports to potentially come into play in your account. With that, everyone, hey, I want to wish you all a great, great day and great profits. And if this is the first time you've seen this information, do me a favor, click on those subscribe buttons, the subscribe button on YouTube, and the follow me button on Facebook. Click those thumbs up buttons. And by the way, thank you very much to all of those folks that are just dropping those wonderful comments. I do appreciate it that you're finding these videos useful. I really do appreciate it. Everyone, take care. Have a great day, and I will talk to you all very soon.